Well, good morning, everybody. I'll be doing a voiceover in this video just to go over the trade that I took this morning. Most of my videos, I am not actually speaking in the video because I'm either doing something or my background is noisy. So I'm not able to speak while I'm doing it, some of my videos. So most of them I'll do a voiceover just to go over. As long as the screen is recording, you guys will see what I'm doing. So this morning I was looking for relative equal highs to be taken and for the consequent encouragement of the RTH gap as well as the upper quadrant to be closed in. The reason I was anticipating the upper quadrant to be closed in because I do have relative equal highs above it. So if I'm targeting those, then automatically the RTH gap would have to be closed in order to hit that target. So those highs were completely so smooth that my eyes jump right to them once I looked at the chart almost 9:30 this morning. So here you can see that I entered the trade on the premise that we've already swept sell side. So I'm expecting buy side to be taken and there wasn't any clear draw lower. And the moment it took sell side, I waited for my entry model. I was so patient. I'm like, if it took sell side and then just reversed to buy side, I would have completely missed the trade. But when I saw that it pulled back and traded below again, created that order block that took another short-term low that was created, the moment that price traded above that down close candle that took sell side, that was my entry opportunity. The moment it trades above the opening price, that changes the state of delivery, and now it's going to seek buy side liquidity and inefficiencies. So the moment that and that's why you saw that I entered before the candle even closed, because once it trades above the opening price, I'm not expecting it to trade back below that down closed candle. So I entered right at the moment that it traded above the opening price of that down closed candle. And I'm pretty happy with the entry because when I look back, there was not another opportunity for me to get into this move. And that's one of the reasons why I love my entry model. It does not require a pullback into fair value gap or anything of the sort. That's one thing I used to struggle with seeing trades move in my direction and not being able to take part of it. And I'm not gonna FOMO into the trade. So I would just sit back and watch trades play out and think of ways that I could get in. So the minute that I learned order block and changed the state of delivery the moment liquidity is taken, that's one of my strongest and most consistent trading models so far. I trade fair value gaps. I just trade it a different way. I used to enter right the moment they touch it, but I wait for two down close candles or a down close candle to trade into it, and the moment it crosses over the opening price of those candles, then I would enter. But this, the order block that takes liquidity and reverses, the changes the state of delivery, that moment, that's just it for me since of lately. So at this point, I saw that it traded above the first presentation, and I was super happy about that because now I can expect it to be used as an inversion fair value gap. Because of risk management protocols, I'm not gonna add to this trade, or you're not gonna see that I added to the trade because I was only able to use one contract because of my account size. So at this point, I could have brought my stop loss to above break even because I didn't, at the time, I wasn't even seeing that there was an institutional order flow entry drill. That just happened. So I could have brought my stop loss up to that area. But again, institutional order flow entry drill is also something that I'm still learning to manage my stop loss around. I'm able to see it, it's obvious, it's just a partial trade back into the fair value gap and then expand outside of it. However, I'm not sure if ICT did give a class around stop loss management regarding the fair value gap or the IO Oh my God, the word is the hardest thing to pronounce. The institutional order flow entry drill. I'm not sure if he explained how to place your stop loss. I know that it's the fact that it just traded partially, just touched the gap, a tick below the fair value gap high, and then it's off. That's the order flow, the institutional order flow entry drill. However, I'm not sure if it's permissible for it to trade back into it on a next candle and still be valid. So for those reasons, I don't move my stop loss based on certain signatures that I'm not entirely familiar with the rules that surrounds that particular PD array. So I opted to keep my stop loss until that high that is taken, but I did notice the immediate rebalance as well. So I could have moved my stop loss. I'm gonna eventually move my stop loss up to into profit, but again, I was also doing something in the background, so I was looking at the trade. So I brought my stop loss up, and at this point, so I'm well up in the trade. I'm over a 2R, but I did say I'm not, my focus is gonna be taken away from 2R into like actual targets, reasonable targets to hit. So I'm gonna actually exit the trade here. The reason for that was because it hit the new day opening gap. I'm still expecting it to go and take those relative equal highs because it's so close, and I'm like, why wouldn't I hold the trade? But I was doing something in the background and I did not want to get distracted. I could have moved my stop up. However, so you're gonna see here that it eventually hit the take profit, but because I was actually preoccupied, I didn't actually move the stop up. But it was a pretty decent trade, and I'm happy with the results, basically. So that's the end of the video. Thank you guys for watching, and I'll see you guys in my next video.